Hey everyone, I'm your host Marcus Norman of Gentleman Style Podcast Show, and today we are going to dive deep into my favorite topic, money, but not just any money, right? Your money, and our future, and building wealth and building legacy. And I couldn't think of a better guest to have on the show today. This man is truly phenomenal. He's a certified financial planner, strategist, and mastermind. I'll say that. He is truly absolutely phenomenal. You will see here shortly as we bring him on to the Gentleman Style Podcast Show. You won't want to miss 1 second of what we got coming in hot. So stay tuned, stay with us. Here we go. Everyone, I'm your host, Marcus Norman of Gentleman Style Podcast Show. And today I have Mr. Mark Willis. This man is a certified financial planner, a three-time #1 best-selling author, and the owner of the Lake Growth Financial Services, which is a financial firm in Chicago, which he and his team build strategies on getting you and his clients to a better financial future. And it's not just about money. It's not just about we want to take your money and invest it, but you are truly one of the family. And I had the pleasure of going through the experience with a member of his team as well, Mr. Brandon Neely, and it was a truly phenomenal experience. And they take you with them on a journey and go through the cutting edge of your finances to make sure that you are truly achieving your goals, because that's what it's about, legacy building. Over the years, Mr. Willis has helped hundreds of clients take back control of their financial future and build their businesses with proven, tax-efficient financial solutions. So this man and his team are all encompassing. They're a one-stop shop. So without further ado, help me welcome to the stage, Mr. Mark Willis.
Marcus, you have one of the best intros and best setups ever, and I hope I can live up to it. I'm so glad to be back on your show.
It's an honor to have you, sir. Thank you, sir. You are phenomenal. You did all the work. I am learning from you every single day. So thank you for being here with us and sharing who you are and what it is you do. Sir, I did you no justice here on the Gentleman Style Podcast Show. Can you dive a little bit deeper on what Lake Financial Group does?
Sure. My pleasure. As a certified financial planner, I've had the great privilege of working with business owners, real estate investors, even NFL Super Bowl champions to help build and create and sustain their wealth. But most people I have had the privilege of working with are simply people who want to take some more control over their future. They're sick and tired of seeing, Wall Street, the economy, uh, the government, and marketers and more siphoning wealth out of their pockets and into their giant cash reserves. So part of what I like to see happen in my conversations with clients is, as we sit down one-on-one over Zoom or over the phone, is to really understand their mindset and where they are wanting to go, their past, their present, and their future. And there's a lot that comes with that. And one of my favorite parts in the financial planning process is just listening, learning to listen and ask really thoughtful and provoking questions that draws out the truth of what a person is really all about. And so that's my great honor to get to work with clients from all across the country to do that sort of work and to see the changes that can bring.
And it's completely true, y'all. Everything he said, you guys know me. I do not bring just anyone in front of you guys. I bring true experts, the real experts. And I, like I said earlier, I had the pleasure of going through the process with Mr. Willis and his team. And it is truly a dissection, but it's comforting. It's not just give me your money, let me charge you some fees, and let me try, put it in some bonds and stocks and bonds. It's truly a in-depth, because there are some concerns, especially now in a pandemic, in COVID-19, in a recession, right? I think it's fair to say we are in a recession, right? they do a deep dive to understand what you want to happen with this money and those fears, because fears is what drive us, especially with investing, right, Mr. Willis? There's some people who are more aggressive investors, and there are some people who are more reserved, and you dissect that like a doctor, you and your team.
Well, doctor is the right analogy. The first thing we like to do is listen before we pull the scalpel out, listen before we diagnose or prescribe. There are hundreds, literally hundreds of different financial products that are available to folks. And honestly, there's millions of ways to put your money to work. You can pick this bond fund or that stock. And who knows, right? Without listening carefully, what's the right solution for you, for your family? And so part of our work is really just understanding the fears, the concerns. What was money like for you growing up? What is your outcome? What would success look like for you? One of my favorite questions that we really dig into early on in the conversations with clients is, hey, let's say it's been 5 years. Let's say we've been working together for the last 5 years. How will you know it's been a success? What are some of the mile markers to help you and me know that working together was a good idea 5 years out? Was it a debt you paid off? Was it, you've met your goal of being financially independent and you can leave your day job? We just worked with someone yesterday who, in 7 years, the game plan is to leave the day job and to live on passive income. That's such a great gift to give his spouse, his kids, and ultimately his legacy. But it all starts with, what do you truly want? And I will tell you this, Marcus, most people I meet have a really hard time with that question. Sounds like such a simple question. What do you truly want? But money is a very interesting phenomenon in most people's lives. We spend so much time with it. I mean, it's half of every transaction we make in our life. We work sometimes 8, 10, 12 hours a day working for this thing called money, and yet we don't know what it's for. We don't have a financial purpose statement. And that unfortunately can mean we end up working for the purposes of someone else's financial plan. I will tell you the truth, Marcus. Everybody else on earth has a plan for your money. Everybody else. I'm talking about the government, about Wall Street, about Madison Avenue and the advertisers. They all have a plan for your money in your pocket right now. And if you're not careful, your money will leave your pocket and go work for them instead. So we must have a financial purpose statement. And that's one of the things we really work with our clients to help design is, what is your financial purpose statement with money? And we could talk some more about that if you'd like.
Absolutely. You guys, this is truly phenomenal. So again, I had the pleasure, the honor of going through this process. Um, in this time, I feel more than ever, people are really out to get you. The scam likely calls are blowing up my phone. Everyone, it seems like it's just after more and more of your money. But you're not gonna get that with Lake Growth Financial Services. You're not gonna get that with his company, with his team. Um, when I sat down with the consultant, they he dissected, he talked to me, he asked me what my pain points were, and then at the end of it, he gave me the what I was looking for and what I was trying to achieve, and he showed me two policies and two plans and strategies, right? There's a strategy, right? Because it's not just a one-time thing, it's a follow-up. This is not a get rich quick, it's a long-term plan for your future. Am I right, Mr. Willis?
Yeah, there are, I think, financial transactionists out there who would love to just sell you a mutual fund or a life insurance policy or an annuity or a real estate deal. There are financial transactionists. There are, I would also say, real advocates. So, which one are you working with right now? A transactionist or an advocate? And I agree with you. I think that there are some great financial vehicles out there, some incredible ones. We've talked about Bank on Yourself before as an example. But even an incredible financial vehicle like Bank on Yourself can be mismanaged if there's no strategy behind it. I could have in my back of my car, I could have Tiger Woods golf clubs in the back of my car, and I could try to take them to the nearby golf course and hit like he does. But it doesn't matter if I've got his clubs. I must have and learn his swing if I'm going to be successful in the game of golf. So you must have a swing, a financial strategy. The swing is what brings you toward your goal. It's not so much the tools. Now, the tools help. And believe me, if you don't have a sharp axe, you're not going to ever cut down that tree, no matter how great a swing you got, right? You got to have a sharp, great financial tool set, but you can't just live on the sexy new financial vehicle, the nice new cryptocurrency you heard about last week, or the meme stock you heard about at the co-office party last week. You've got to be able to have sharp financial tools, but as important, if not more important, is the mindset and the intention and the strategy to help you be successful in your money journey.
I love that. Mark Willis, y'all. Mr. Willis, I have to ask you. I love it. Mr. Willis, sir, one of the core mindsets that you talk about, and it's not new, but it may be new to some people, is the FIRE movement as a principle. Can you explain what that is for my audience and what and
Sure,
how does that fit?
we're big on acronyms in the financial industry, like many industries, but financial independence, retire early, FIRE. And it's a movement that has been really catching steam, but it has roots from clear back to the 90s. Some people have decided that they want to get to that financial independence as early as possible and retire as early as possible. So it also comes down to, what does the word financial independence mean for you? What does the word retire mean for you? And what does the word early mean for you? So there's no clear definition of that exactly, but the premonition makes sense. Instead of working for 40, 50 years to slave away for the almighty dollar and hopefully scratch together a little bit of money so you can live on a pittance in retirement, many people are choosing to be just absolutely aggressive in their savings rate. I think it's a reaction, to be quite candid with you, Marcus. It's a reaction to the pathetic savings rate we've had as a country and as a world, but mainly as a country in the United States here. Our savings rate on average is about 4.5 to 5% of our income.
Hmm.
Now, that's not enough if you consider the fact that that is for our retirement, it's for our emergencies. It's for our kids' college. It's even including our debt payoff. Okay, so 5% of our income to go toward all of those savings is just plainly not enough. And I think the reaction of the FIRE movement is, let's save 30% of our income at least. Let's see if we can save 60% of our income, 80% of our income. How can we live on, beans and rice for the next 12 years so that we can never have to work ever again? And how can we buy cash flowing assets such as real estate or annuities that would provide for us a permanent lifetime income so we can live the hashtag van life or whatever it is that you want to do in your retirement years?
Yes, yes. You had and you guys have to check out his podcast, the Lake Grove Financial Services podcast. Mr. Willis, you interviewed, dare I say, the mother of the bank on yourself mindset. I'll say mindset. You had her on your show, and that was a dynamic interview. What are some key points that we are missing, that most people are missing when it comes to planning for that financial future? Because you and your team consult to this. What's the common theme that we're missing the mark on that you are seeing? And from that interview, because you talked about it on that episode as well, and it stuck out to me.
Yeah, the honestly the I'd say the biggest piece of this is, Pamela Yellen, who wrote the book The Bank on Yourself Revolution, was interviewed on our podcast, Not Your Average Financial Podcast. And the mindset of bank on yourself is just as important as the financial tool. So we go back to clubs and swings here again, but there is a product which is a sort of an augmented tool, a modernized form of whole life insurance, which I know you and I spoke about last time on your show, Marcus. And we got really into the details of how it works. But you asked another question, so I want to try to focus on that. What is the bank on yourself mindset? So, what is the swing, not just the club, but what's the swing of bank on yourself? In my opinion, many people live their life almost like a tennis ball floating down a gutter. They're just sort of passively moving through their life. Things are happening to them. They take the credit card that they're offered in college. They take the 401k at their first job. They take the cryptocurrency that they're, pushed into by their, brother-in-law. And before long, they get the big mortgage. They get the bigger mortgage on the second house. They get the HELOC. They get all this stuff just tossed in their, in their bag, and they're just sort of floating down life's gutter until they realize that they are trapped. They're trapped in a life they don't want, with a job they can't stand, with a boss they don't know how to, deal with, and that becomes most people's, reason for being. That they're just simply slaves to their past choices. They can't touch the 401k until they're 59 and a half. They can't really do much about this massive amount of student loan debt that they got. They can't do much about the credit cards that they have. Bank on yourself counters all of that. And they say, you know what? Honestly, if you become your own source of financing and you think like a banker, if you begin to think differently about your money and your economy, you're able to build a a cash reserve and become your own source of financing. What if you could actually bank on yourself? Lean on your own reserves, become your own money supply. Forget the Federal Reserve. Okay, become your own money supply, become your own fractal reserve. It's one of my favorite things to see people do, is to fire their banker. And maybe it's paying off their credit cards. For me, I paid off over $120,000 of student loan debt. You can become your own source of financing. That's right, that's right. And so, yeah, if you think differently, you'll act differently. But it starts with the 4 pound knot of neurons in our head. You got to think differently. Otherwise, you'll keep doing what you've always done, or worse, what other people tell you to do.
Mm. And that is the worst. That is absolutely the worst. You're so right. Mr. Willis, how can I fire my banker? What is when someone sets up a consultation, because there's a link to set up your own consultation, guys. What should someone have prior to setting up that appointment with you? What should they have already prepared? Should they have $1,000, $200,000 in the bank before setting up that appointment with you? What's the process there?
Well, most financial advisors charge you a fee on your assets. They literally call it assets under management fee, AUM fee. That typically means that they're going to cut you off unless you have a certain net worth. Sometimes they tell you need to have $100,000 of investable assets or 500,000 of investable assets. I don't believe that that's fair, and I think it cuts off a great majority of Americans, because many people, honestly, the average 401k balance for a 50-year-old is 55,000 bucks. That's for a 50-year-old.
Mm.
Okay, so the average American doesn't have access to any quality financial advice or partnership or advocacy. I think that's a shame. So our business model is different. We work mainly for folks without having to charge you a fee for assets under management at all. We don't charge you a fee to listen. I don't believe that that's fair for us to charge you a fee just to listen to your concerns and goals, figure out where you're at financially. And if we can be of assistance, we're transparent about exactly what the costs would be of any kind of account we might set up for you. We show those to you in detail before we sign up any accounts or sign you up for any rollovers or whatever we might do for you. We show it to you plainly because I believe that that's the fair thing to do. It's what I'd want my family to have happen for them, quite candidly. And I'm happy to say that over a 30-year period, we've done the math again on our podcast, Not Your Average Financial Podcast. We've done the math on it, and comparing what we would be paid for a similar contribution to an assets under management model, we end up costing about 1/10 as much. But I believe we give 10 times as much value. Case in point, the markets this year, Marcus, I don't have to tell you this, are down 20, 30, 35%, depending on what index you're looking at. If you're into tech stock, it might be even worse than that. But our clients at Lake Growth Financial Services are hitting all-time record highs this year. They haven't lost a penny, and they won't, because their assets are not dependent on somebody's imaginary valuation of Twitter or whatever stock they might be invested in. So we do our very best to build real wealth on with contracts rather than just shaky wealth on paper and stock prices.
I love that. That's huge. Mark Willis, y'all, changing lives every single day, right? In a time of recession, in a pandemic, when the stock market is down, when the financial industry is not looking well, I heard the what you mentioned earlier. I recently heard the cost per hour for a financial consultation. This gentleman charges $250 an hour to listen, just like he said. But that's the feeling. That's not the goal with Mr. Willis and his team. Mr. Mark, there's an aspect. How are you achieving these hit points? And it has to do with the fact that you guys are taking in and investing your clients' money into mutual companies. What does that mean? And what does that mean for me? Because that the biggest concern I have is losing money, especially when I'm in my retirement years, which I have many more years to go, but I also have a goal to be retired early. And so, how is it you're able to achieve these milestones?
Well, yeah, it's not magic. It's been around for hundreds of years, and we're not anything, um, you know, I think magical. Our firm, we're just looking in different places. When I was a kid, there were all these Easter egg hunts, and all the kids would rush toward one area and then rush to the other. But there were always a few kids that would find all the eggs in the places that the other kids weren't looking. And I really believe, as a certified financial planner, if you notice the herd running in one direction, you might want to be a little contrarian and look somewhere else. If you follow the herd, you'll get slaughtered. Okay. That's the truth when it comes to the markets. And it's true when it comes to many things in life. If you follow the herd, you will get slaughtered. So there are other alternative assets. There's non correlated assets like whole life insurance, like fixed index annuities. These are contracts with your wealth. Have you ever written a contract with somebody? I'm sure you have, whether it was a mortgage or just a business proposition. Why not have a contract with your money? And that's what insurance contracts are. They're a contract with your wealth. You get a guaranteed, predictable increase of your wealth every single year, and that's a contract with a mutually owned life insurance company. Now, what does mutually owned mean? Well, just to keep it real high level for a minute here, anyway, there are two kinds of life insurance companies. There are public traded companies. That'd be any company that you'd be able to buy the stock for on the US stock exchanges, or there are mutually owned life insurance companies. Closest thing I can describe them to, it's more like a credit union or a co-op if you're familiar with those. It's owned by the members. There's no other outside influences. There's nobody else getting wealthy off your back. And when it's coming to something like life insurance, I don't want many other people watching my back, if you know what I mean, right? I want that thing to be airtight. So having a mutually owned insurance company, where I and all the other policyholders are the only ones profiting from the business, it's almost like I've entered into a business relationship with whatever, 1,000 other people, 10,000 other people, and we're all sharing in the profits together. And in fact, that's exactly what happens. The companies that I typically recommend to my clients have been around for over 100 years. And even during the Great Depression, even during the last pandemic of 1918, including this most recent pandemic, and including this recent recession that we're going through, the mutual insurance companies we've recommended, it's business as usual. They have not failed to pay guarantees, they've not failed to pay dividends for an entire century plus. That to me speaks of financial strength, and it allows me to know that they're not playing a bunch of tomfoolery in their balance sheets. In fact, they're audited regularly by the members and by third parties, and I can go to vote if I think there's not great leadership or for any reason want to make a change. I have a vote on the seat at those insurance companies. I am a co-owner in essence, like anybody else that has a policy with these mutually owned companies. That is so different than what we're seeing play out on Wall Street, where we're essentially the fodder for the cannon fodder for many very wealthy billionaires. They'll take a company, raise a bunch of capital, and then they'll suck it dry of all the profitability. Then they'll dump it on the public exchanges like Dow Jones or S&P or whatever. They'll dump it on one of these exchanges, and what end result is sort of a um a less than wonderful result. You've seen so many IPOs just crash and burn. Look at Airbnb, look at WeWork, look at Netflix. Even, I mean, it had a meteoric rise and then a crash. How many other IPOs are going to just have a tremendous crash as soon as it goes public? Coinbase, another one. There's a lot of great ones out there, but many times the public traded stock, it's just that. It's sort of the leftovers after the billionaires have had theirs. So be careful with using public traded companies. There's certainly money to be made in the markets. There's certainly money to be made in crypto. But for my central wealth, the real wealth, I want it built around not paper wealth, money that goes up and down, but through the contract. That's truly where I think really the basis of all civilization is built upon, is the contract.
Love it, love it. You said it. You hit the nail on the head, and that's what I really wanted you to say right there. Is that financial planners, financial certified financial planners have a fiduciary responsibility to its policyholders. And so, what Mr. Willis and his team do differently from traditional consultants and agents and brokers and dealers is that, like he said, you're not the CEO and the top executives get paid first, and then the policyholders or the investors get whatever is left. That's not their goal. Their goal is we all win. We all are going to
Hmm.
profit from this. We all are going to benefit from this. So that's a key difference. And
That's
again,
right.
the solvency, right? You
That's
want
right.
to make
There's
sure they're going to pay out.
if you've ever been to the mall, if you've ever bought on Amazon, you know what paying retail prices feels like. But if you've ever gone to Costco, you know what wholesale prices feels like. And if you've ever been in business, you know what it feels like to buy direct. And many times we pay for our financial life, we're paying retail prices for amateur investment products. We're overpaying and seeing under delivering happening. And I mean this quite literally. The average investor return over the last 30 years, according to third party research like Dalbar's annual quantitative analysis of investor behavior study, their 30-year return for the average investor who has a blend of stock and bonds, this is 30 years now. Okay. If they've got their retail buy it at the mall kind of mutual funds in their 401k, their return are, you ready for it? 2.29% over 30 years in the market.
What? What?
Can you believe that?
That's
And yet,
terrible.
investment gurus and money managers are telling you can just fall off a horse and get 8, 9, 12% a year. That's just not true. All right. Now, there are some people who've been able to move up the food chain and buy wholesale, where you can cut out the middleman because those fees that we talked about earlier are really what cut into your returns. The Department of Labor says that over a 35-year period, a 1% fee on your retirement account will eat up almost a third of your life savings. Just a 1% fee.
Mm,
Now, how long do you plan to live? Probably longer than 35 years. I hope. I hope. Now, if you've got a 1.5% fee, like is the average for an IRA, that could be half of your life savings just gone to fees. Marcus, that means your investment advisor can retire before you can with your
mm,
money.
mm, mm.
It's not fair. So move up the food chain. Again, rather than just being a tennis ball floating down the gutter of life, I love it when I see clients moving up upstream, financially speaking, and they're using their bank on yourself policy to purchase real estate, even to purchase other investments, to do all sorts of things that help them take back control of their financial future, which is really what inspires me to keep doing what I'm doing today.
Mr.
You're
Mark,
good at that, man. I love that.
Mr. Mark, the big point. Everyone talks about saving, getting debt free. Dave Ramsey, everyone's on the gravy train. Pay off debt. You and your team actually have and speak to this and coach to this that there is a level beyond debt free. Is it truly possible to be better than debt free? And what does that look like?
Yeah, the I think the advice of the oh so average financial media is to just pay off your debts, and hopefully one day you can finally begin to build wealth. And wouldn't you know it, I'm starting to meet people now where their student loans are carried into their senior years and they're getting their social security checks garnished because they still haven't paid off their student loans. I think that's just devastating. But many people believe that paying off your debt is the holy grail, and that you're only moral if you're debt free. And I just don't think that's the case. I think there's good debt and there's bad debt, and
Yeah.
we can agree, I think, that there's good debt and bad debt depending on the situation. And some people just can't handle even certainly no one likes bad debt on the balance sheet. But if you've got some good debt, like low interest rate mortgages, let's say, it's okay to put your money somewhere else where you might get more than the interest that you're paying on your mortgage. If I can have debt that's paid by other people, that's not really being debt free. I was just playing Monopoly Junior with my daughter today, and I had to pay her rent, but I had another business on another space there that was paying me more than I was having to pay her. And now my 6-year-old can get that. Now I think many of the business owners that listen to your podcast can figure it out too. Now we talk about being better than debt free, and I mentioned that I was way behind the starting line of my financial life when I first woke up to money. I realized that, man, I've got a serious problem with my debts, and I knew that $120,000 of student loan debt was going to be like a burden around my neck for the next decade or more. And so I did. I put together an alternative way to pay off the debt. Thankfully, some mentors of mine were gracious enough to slap me upside the head and help me think different about how to do this debt payoff thing. I was just following Dave Ramsey's thing blindly. And it wasn't until a good mentor of mine sat me down in a chair and said, Mark, is it possible that Dave Ramsey could be wrong about something? Now, I had never really stopped and thought about that as even a possibility. I thought maybe he was like, straight from heaven, with angel's wings on his back, that he had the fifth gospel. No, but I realized over time that paying off your debt is an opportunity lost.
Mm.
Because yes, you're paying off your debt, and that feels good. It's sort of like the sugar high of finance. You pay off the debt, and boy, it feels good for about 15 seconds. Yeah, you do your debt free dance, you do your debt free scream. And then you have this empty feeling inside your bank account. That's the empty feeling, those empty calories of paying off your debt. You'll never see that money work for you ever again. It's now working for your mortgage company, your car company, your credit card company, or in my case, the student loans. And I knew that those were my most valuable dollars because that's money that I earned and was putting to use at my youngest stage, right? We'll never be this young again.
Time.
Right, time. Exactly.
We've lost
Time is
time.
another currency. That's why we spend time with those we love. All right, so we can spend money, but we can also spend time. By the way, there's an acronym for this too. The four currencies, as I call it: time, energy, attention, and money. TEAM. The team are your four currencies, and are they flowing to you or are they flowing away from you? Currencies flow, right? The current. But your time, energy, attention, and money are all integrated to help flow in your direction or away from you, depending. And I was letting money flow away from me, but I was also letting the time flow away from me. That dollar in my pocket was going to grow for the rest of my life, but I paid off my debt. And so I'll never see those monies ever again, the money I paid off directly to my debts. Thankfully, I stumbled across the bank on yourself concept about halfway through this program of paying off all my debt. And so rather than following Dave Ramsey's debt snowball method, I stopped. I kept current. I didn't stop paying my debts, but I kept current on those. And instead, I flooded all the money I could into my own bank on yourself type whole life policies. I built up wealth in there, and then I borrowed against my policies and wiped out my debts one at a time. This is better than being debt free because when you borrow against the policy, it continues to compound and grow as if you had not touched the money. So to me, this beats paying cash for big purchases like paying off my debts or buying a car or really investing in real estate or anything else. Because now my money's doing two things. Yes, I paid off my student loans, but I also used it for an asset for my future, my retirement someday, or other real estate investments and whatnot. So yes, time, energy, attention, and money, all of them have to flow in your direction. Let the team work for you. Otherwise, it's going to go work for somebody else. I got to get those. You got a great audience here, man.
Mr. Willis, you are absolutely incredible. I am just blown away every time. And like I said, I am a subscriber to your podcast and what you and your team are doing and what you guys share. You guys recently had that mastermind podcast episode, and that was inspirational. Sir, what would any final nuggets, any final tips you would give to that young boy, that young girl out in the audience, whose back is against the wall? President Biden doesn't know what he's going to do. He's going to pay off your debt. He's going to leave you with the debt. He doesn't know what nugget. You've dropped many nuggets today. What final nugget would you give to that young boy, that young girl in the audience? Any advice?
Yeah, don't wait on President anybody. I don't care if it's, President B or President T or President XYZ. Be your own president, be your own banker, be your own Federal Reserve. You know, learn to work with the rules of the road, figure out your golf clubs and figure out your golf club swing, and figure out, most importantly, who you are and what you want your money to do for you. Don't let anybody else tell you what your money should do. You go out and do that, and you'll be much more proud of it. You'll be much more, I think, successful as a result.
Mic drop. Mic drop. Oh my God. Sir, how can we connect with you? How can we learn more about what you're doing?
Thank you. The opportunity to chat with me is open. If you'd like to have a strategic 15-minute phone introduction, I'm not afraid to have a quick call and have a conversation with you. You can find our website at kickstartwithmark.com and we can have a discussion. What would it feel like to never have any more unpleasant surprises when you open up your account statements, your retirement accounts, or your debt payoff strategy? So that's kickstartwithmark.com. And Marcus, I got to say, man, you're great at what you do. What a great host. And I appreciate everybody give this guy 5 stars. Go on all the review sites and make sure he knows that you love him as much as we all know you do. And so get out there and give him that 5-star review.
Thank you. Thank you, sir. It is truly phenomenal. Mr. Mark, thank you again. These nuggets. You guys got to get connected to what they're doing. It's not too late. It's not too late. It's never too late. Connect. These, Mr. Mark and his team, are the real deal, and they truly care about you. You're not just a dollar. You're not just a customer. Thank you, sir. I want to say this to you publicly. Don't ever quit. We need you, sir. We need what you're doing.
That right back at you, man. Thanks again for having me on.
Absolutely. Thank you, my audience, for tuning in to the Gentleman Style Podcast Show. I hope this helps. Like I always end every show, take care of your friends, take care of your family, and always take care of business. This is Marcus Norman, Gentleman Style Podcast, signing off. Love you guys. Bye.